Joining us here on set, CNBC's Steve Kovac, and remotely, Rohit Kulkarni is managing director at Roth MKM. Welcome to you both. Rohit, I'll just toss it to you. Unduly selling off on these cloud comments? You think Amazon's the only one? Are they losing share?
I think whether they're losing share or not remains to be seen. But I think the report was, I would say, 4.5 stars out of 5 stars. They beat on a lot of metrics. Profitability is growing. They're curbing their expenses, lowering capex, a lot of good things. You can't please investors all the time. So AWS drives a lot of sentiment. So I think that's where we are at. But we would be buyers.
What is the market misweighing here?
In my opinion, they are not giving Amazon enough credit for international retail margins, North America retail margins, even AWS margins. AWS for Q1 was not that bad. And then overall, for the third year in a row, they're going to decline CapEx. This company did spend a record amount in 21, but then 22 was a step down, 23 is a step down. And that's showing a lot about the cash flow potential that this company might have next couple of years.
Steve, what do you think the stock reaction is telling us? Both the initial surge last night, because remember, it was up 4% or 5% into the print. So for a second there, it looked like a really impressive day. Now, of course, the fact that they can't kind of overcome this sell-off on that comment.
Yeah, and it's the guidance was good, too. So that was some of the optimism going into that call, too. And look, a lot of it comes down to the AI. Even if you believe AI isn't going to be as big as you think, the perception out there is, and they're getting punished for that. But look, I think also what kind of goes underappreciated is, and I don't think they explain it super clearly on the call, is they keep talking about optimization with customers and helping them save money. But if you're looking at Amazon the long term, that's a good move, isn't it? Because you want to keep those customers. You don't want them to go to Microsoft and start running their AI language models on Microsoft or Google, which, by the way, their cloud turned a profit for the first time. It's just way smaller than the other two. But look, it's still a market share battle, and there's this perception now that Microsoft can eat even more into Amazon's lead.
Rohit, what do I do if I own the stock? What do I do if I don't own the stock? Is this one that is kind of dead money for a while, or is it going to move higher?
Both those groups should buy Amazon shares, in my opinion. I think over the next 3 months probably stays range bound. It's a sentiment black box. I wouldn't say there is anything wrong with fundamentals. And if you look back 18 months and look ahead 18 months, I think I rarely use this word inflection. I think Amazon is going to show that they're inflecting on profitability and cash flow. The post-COVID digestion period has, I would say, almost ended with how they're thinking about profitability and cash flow generation. And I think over the next 18 months, now is time as good as any to buy Amazon based on how the 3 segments that they are in, retail, advertising, and AWS, all 3 are going to be more profitable 18 months from now.
Not to switch gears, and I don't know if this is switching gears, but to see what Snap and Pinterest have reported and the share price reaction there. I mean, last week they were both down about 20%. And this was after Meta came out with much better trends. So, and Julia mentioned this off the top, but Rohit, their AI tools appear to be helping in advertising. So is this an AI story? You know, the bigger using it, they're getting bigger, something like that? Or is there something very different going on here?
There is definitely a layer of AI story, but with Pinterest and Snap, I think it's a function of kind of when the advertising pie stops growing, in my opinion, the larger get more market share. So you have Google, Amazon, and Facebook. They are getting more market share as the advertising pie is not growing as much. So there are smaller experimental platforms tend to get hurt more. So they tend to lose a little bit of share. And probably that sets them up if, I don't have a crystal ball, but if we are in a macro recovery zone in, say, 3, 6, 9 months from now, that's the day you buy smaller players like Snap and Pinterest.
Although ironically, Steve, Snap had that My AI,
chatbot
thing that went over pretty poorly. So maybe they just applied AI to the wrong dimension here.
But also, like to go off that point on advertising, there's a reason why advertising at Amazon is so special and growing so quickly. It's because they sell stuff. And so you have an immediate intent. When you search for batteries, boom, Duracell can show you an ad.
Or whatever,
exactly.
Yeah.
Search for toilet paper, Sharp, and so on and so forth. But also on the call, what was interesting last night, they're like, we barely started scratching the surface of what we can do in advertising. Keep in mind, they have Prime Video. They have all these other surfaces, music as well, that they touch that they haven't really explored in a significant way yet. They're doing a lot of sports programming. There's a lot of advertising opportunity there as well. So it's not over yet. That growth there's still a long runway for them to grow, eat into Google's market share, by the way, too.